Hey, welcome back. This is my market report. I try to do these more than twice a year, but the springs have been so crazy that they're hard to get out. But what we're going to do here is we're going to look at what we've learned about this year in the real estate market, what it tells us about last year, what it tells us about the next 6 months and next year, and we're going to try to figure all that out in just a few minutes. So stick around. Okay, so the market, as I talked about in my last report, it's still constrained by inventory levels. There are lots of people who would like to do stuff, but ultimately the properties that they're looking for are very hard to find, and it's just because there are just spots where the things that people want there's too many people who want them, so those properties are still getting premier prices. So, but having said that, we are starting to see some changes in the market over the last 6 months. So there's a bunch of stuff that I look at. One of the things that I look at is I look at total rentals. The more rentals there are, the more options someone who's trying to buy a house has. So that number is up pretty significantly from, it's up like 15, almost 20%. So that's a pretty big jump. If that continues to go up, then we're going to start to see, probably a little bit more inventory build. The number of single-family houses that are for sale, that number is up about 40%. That's pretty significant. So we'll talk a little bit about why that is in a minute. So prices are definitely up year over year. And you would think that if there's more houses for sale and more rentals, that prices shouldn't have gone up. And it turns out that that's not what happened, and a lot of that is because the inventory levels, even though things are up, are still really, really tight. So, but again, there's some other data points here that are worth watching. For the houses that are not sold, the average time that they're on market is around 35 days. That's not very long, but it's almost double from where it was, which was at 20. And the median sold is 18. And so that number for years has been under 20. It remains under 20, but it is starting to move up again. So basically what we're seeing now, currently, in the last month and a half, is that if your property is really overpriced, then you're probably not going to find a buyer. And overpriced means a whole bunch of different things, but buyers are starting to get more discriminate about what is worth what. And part of that is because they can see some stuff that's not selling. It's hard for buyers to get a good feel for the market when there's nothing for sale. There's not enough for sale, but there's enough out there where they can get some sort of feel for what is worth what. So, but to really talk about the spring, I pulled this up. So I'm on a bunch of housing mailing lists and housing valuation stuff, and this is one of the ones that I get. And I know a lot of my buyers got frustrated this spring, and it's because I sort of felt like with interest rates had been up for a while, and we'd sort of seen them have a drag on the market. So all we needed was a little push, a little normalized push of inventory in the spring, and I think we would have seen prices either hold steady or even come in a little bit. Unfortunately, the inventory really didn't show up. And what we had was basically a short squeeze. There were a small number of highly motivated buyers who did not care about price but very much wanted to move. And you can see here in the graph, as the closing data is starting to come in, that they push prices up. So I drew that line under there to sort of show you that prices usually go up on a fairly regular basis. Okay, they don't tend to go up in big spikes. But what we have here is a big spike, and that spike works out to about 7 or 8%. So you had situations where buyers were very comfortable paying an extra 7 or 8% over basically what the same house would have sold for 6 months ago. You don't see that behavior very often, and I think even though I sort of knew that there was going to be this squeeze coming, I could see it coming because there was no inventory out there. I was surprised at how aggressive things got, and really how few houses came on to sort of meet that demand. That was really sort of the surprise. And when I mean not a lot of houses, let's take a look. So in 2022, if I just look at the single family line here, there were 47,000 home sales in Massachusetts of single families. So that was down from 2021, I think, but still sort of a good baseline. In 2023, that number dropped to 37,000, which, it doesn't take a lot of math to figure out that that's like 15%. This year, it looks like it's going to drop again. So, it's almost down 30% from 2022. So we only have 17,000 house sales. Even if you're very optimistic about the fall, maybe you can get to 32,000. But honestly, you got to remember 65 to 70% of the property is usually sold by the end of July. So, I think it's going to be a real slog to try and break 30,000, which is just, there's just not a lot of transactions out there. The condos seem to have leveled off. I think that's because condos are more affordable, and so you're seeing more sales down there. But, there's just not enough inventory for an economy in Massachusetts that's growing, that has people that are trying to, establish households and get into the market. There's just not enough. Just not enough there, and that's why we had that short squeeze, that dramatic run up in prices. It's worth noting that if there had been the same amount of inventory as last year, again, I think things would have worked out different. Inventory levels where they are, it's a problem. There's just no two ways to put it. So, but if we look back, if you were here 6 months ago and you were looking at my market report, I basically said January, March was unlikely to bring many sellers. You can put 2 check marks next to that. It really didn't bring any, okay? And things were already tight. And I said inventories will remain tight all spring and could get tighter. That also happened. It really wasn't until the last 5 or 6 weeks that inventory started to loosen up at all. And rates had fallen a little bit when I did this last report, but I didn't think that they would fall much further. In fact, they basically have just bobbed around 7%. Basically, since I did this, they haven't really fallen at all. They may go down a little bit in the fall, but again, I think for the most part we are probably stuck here until after the election anyway. And I said that it would still be a strong seller's market, especially for properties in good condition and good locations. Listen, I undersold that. Okay, I thought things would be really strong for those types of houses. They were way, way stronger than I expected them to be. Again, if you get a lot less, I expected inventory levels to go up this year, the number of transactions to go up this year. Instead, they went down significantly. And when you miss like that, then it's very difficult to get the price direction right. And so even though I had the direction right, I had the magnitude wrong. It was much more intense than I thought. But looking forward, what we're really seeing now is that the new listings has slowed down, which is very typical for this time of year, especially the A-condition properties. There seem to be a lot more of those in March and April when the market started, and now there's been fewer of them. But the buyers also, they have largely gone on vacation. One of the reasons you're getting this market report now is because it has gotten pretty quiet out there. But the buyers will come back, but with the election looming, I'm not really sure which way the market's going to tilt. So generally, if it's a close election, it tends to put the real estate market on hold. Not good news for real estate agents, I will tell you. It means that we're going to have a very short fall and probably not much to do as we approach Halloween. But you never can tell. Every year is a little bit different. Maybe everyone's tired of making such a big deal out of it and we'll have a normal season. I doubt it, but one can hope. So I think when the A-condition properties are out there, they are still seeing outsized demand. The buyers at this point are very sophisticated because they've been looking at a lot of property and bidding and losing. And so when they see stuff that they really like, they are being aggressive as they can be. But, it's still hard to get those properties. But the properties that are not in, the best locations or in the best condition, they are having to find that the gaps are widening between what they might have gotten a year ago or 6 months ago or even 2 months ago and what they're probably going to have to get going forward. So the big question here is what's going to happen in the future. And so the evidence to say that more inventory will come on and housing sales will take longer and buyers will get more choices and prices will retreat is because we are seeing that happen in lots of parts of the country. And these interest rates are restrictive. They are slowing the market rate, the market down. And in places like Florida and Arizona and Texas, prices are coming in. And the longer these rates stay where they are, the more cities and towns are going to take part in too much inventory. We're still a ways away from that here. The other thing that could possibly happen is the sellers don't list at all. And what happens is the buyers that are out there just continue to pick away at what's on the market until by the time we get to December and January, there is nothing left. That is what happened last year, and that is what set the stage for that price spike. So either one of those things could happen, or something right down the middle could happen. But right now it's very hard to see because there are arguments on both sides. And so usually you can kind of see where the momentum is building. But right now, just in the last 6 weeks, we've seen sort of a drawdown in buyer momentum. And if that continues for an extended period of time, then we will see an inventory build. And hopefully, if we go into 2025, people won't feel quite so desperate and feel the need to push the prices up. All right, so that is the market report. That's where we were. As you can see, I managed to call it pretty well. And so now we'll see if my predictions are any better for the next 6 months. And by the time we get to the end of the year, we'll start talking about 2025. So not only can I come out to your house and give you a very accurate valuation, but I can also probably get very close for most homes with a no-visit valuation. Just give me an address and give me some ideas about your house, and most of the time, if it's a relatively predictable house, I can probably get you close enough to figure out whether or not you want to refinance or borrow some money, or whether or not it makes sense to downsize or move. So for those reasons, I'm happy to give valuations. All you have to do is reach out to me. Got the phone number somewhere down there on the YouTube channel. Hopefully you'll reach out and talk to me. And that's it for today. Hope everyone has a great summer.